Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Business loans. Commercial loans in the UK are an essential financial tool for businesses looking to grow, expand, or simply maintain their operations. These loans can provide businesses with the necessary funds to purchase equipment, invest in property, or even meet day-to-day expenses. Commercial loans differ from typical personal loans as they are specifically tailored towards businesses, with unique lending terms, repayment options, and interest rates that cater to the requirements of the commercial sector. When considering a commercial loan in the UK, it is important to understand the various types of loans available, as well as the eligibility and application process. Each loan type is designed to address specific business needs, so it is crucial to carefully assess and evaluate which option is best suited for your business. Additionally, factors such as interest rates, loan terms, fees, and charges, as well as laws and regulations surrounding commercial lending in the UK, should be taken into account to ensure that you make an informed decision. Understanding commercial loans UK. As a business owner, it's essential to familiarize yourself with the various types of commercial loans available in the UK. These loans cater to various business needs and can be a valuable source of financing, so understanding what's on offer will enable you to make informed decisions. One common type of commercial loan is the term loan. This loan involves borrowing a specific amount of money, which you then repay over a set period with interest. Term loans can be used for a variety of purposes, such as purchasing equipment or covering operating expenses. Another option is the short-term loan, designed to meet immediate cash flow needs. These loans typically have a shorter repayment period, often less than a year, and can be useful for situations like managing inventory or financing seasonal fluctuations. If you're looking to secure a commercial property, commercial mortgages are a form of lending specifically designed for this purpose. The main difference between a commercial mortgage and a residential mortgage is that the former usually has a higher interest rate to account for the increased risk associated with commercial properties. When selecting a commercial loan, it's crucial to carefully consider the interest rates on offer. The rate you receive will depend on various factors, including your business's credit history and the lender's assessment of risk. Fixed interest rates provide certainty, as the repayment amount doesn't change throughout the loan term. Before you apply for any commercial loan, ensure that you have a comprehensive understanding of your business's finances. This involves having a detailed financial plan in place that outlines your projected earnings, expenses, and cash flow. Ultimately, finding the right commercial loan for your business requires thorough research and a clear understanding of your financial needs. By carefully analyzing the various loan types, interest rates, and repayment options, you can secure the funds needed to support and grow your business successfully. Types of commercial loans. There are several types of commercial loans available in the UK, suitable for different businesses and their specific needs. Understanding the differences can help you make informed decisions when financing your business. One common type is a secured business loan, which requires you to provide an asset, such as property or stock, as collateral. This type of loan typically offers lower interest rates due to the reduced risk for the lender. However, if you cannot repay the loan, the lender has the right to seize the pledged asset. In contrast, unsecured business loans don't require any collateral, making them a more accessible option for businesses that lack significant assets. Since these loans pose a higher risk for the lender, they usually come with higher interest rates and stricter eligibility criteria. However, if you have a strong credit history and stable cash flow, an unsecured loan can be a suitable choice for your financing needs. Stock-based loans allow you to borrow money based on the value of your company's stock or inventory. This type of loan can be especially helpful for businesses with high inventory levels, as it provides access to working capital without the need for traditional collateral. However, keep in mind that you might need to maintain a certain level of inventory, and if the value of the stock declines significantly, the lender may require further security or even call the loan. Commercial mortgages are another popular form of commercial loan. These loans are designed specifically for businesses looking to purchase or refinance commercial property. To secure a commercial mortgage, you will typically need to provide a deposit of around 20% to 40% of the property's value, and the property itself serves as collateral for the loan. This type of loan generally offers longer repayment terms and competitive interest rates, making it an attractive option for businesses looking to invest in real estate. In conclusion, considering your business's specific needs, financial situation, and available assets will help you decide which type of commercial loan best suits your requirements. Whether it's a secured or unsecured loan, stock-based financing, or a commercial mortgage, each option has its own benefits and drawbacks that you should carefully weigh before making a decision. Eligibility and application process. When considering a commercial loan in the UK, there are certain eligibility criteria you should be aware of. Many lenders evaluate factors such as your business's age, credit history, and financial performance. Whether you are an SME, a new business, or a well-established organization, meeting these criteria can make a significant difference in your ability to secure financing. To begin the application process, you'll first need to gather necessary documents. Typical requirements include business plans, financial statements, tax returns, and personal identification for key stakeholders. These documents allow lenders to assess the financial health of your business and make an informed decision about your creditworthiness. Throughout the application process, it's important to communicate clearly and promptly with potential lenders. Providing accurate and up-to-date information can help streamline the process and increase your chances of getting approved for a commercial loan. Bear in mind that eligibility criteria and application processes may differ slightly between various lending institutions. However, by understanding these key aspects and presenting a strong case for your business's viability, you will be better positioned to secure the commercial loan you need to grow and succeed in the UK market. Repayment options. When considering commercial loans in the UK, it's essential to understand the different repayment options available. These can help you manage your cash flow effectively and tailor the loan to suit your business's needs. Most commercial loans offer flexible repayment terms, allowing you to choose from fixed or variable interest rates. Fixed interest rates provide certainty of your monthly repayment amounts and can be useful for budgeting purposes. On the other hand, variable rates may fluctuate in accordance with market conditions, which may result in lower or higher repayment amounts. Borrowing options vary, with loans from UK banks ranging from £25,001 to £10 million with terms up to 25 years. Repayment holidays are another useful feature to help manage cash flow. Many lenders offer capital repayment holidays, allowing you to defer up to 2 repayments or take a break from capital repayments in the first couple of years. For instance, some UK banks provide the ability to defer up to 2 repayments in the first 2 years of their commercial mortgages. However, keep in mind that interest still accrues during these repayment holidays, and your overall loan term will be extended. Interest-only repayments are an option offered by some lenders. This means you only pay the interest on your loan during a specified period, reducing your monthly repayment amount. This can be beneficial for businesses with fluctuating cash flow. After the interest-only period ends, you will need to start repaying the principal, and your monthly repayment amount will increase. It's essential to read the fine print regarding early repayment charges or closure fees. Some lenders do not charge early repayment fees, allowing you to pay off your loan faster without incurring additional costs. In summary, commercial loans in the UK offer various repayment options to suit your business needs. It is crucial to carefully consider repayment terms, interest rates, and other features like repayment holidays and early repayment charges to ensure the loan fits your financial situation and helps your business thrive. Interest rates and loan terms. When considering a commercial loan in the UK, it's crucial to understand the interest rates and loan terms that lenders offer. This will help you make an informed decision about which loan suits your business needs best. Interest rates on commercial loans can be either fixed or variable. Fixed interest rates remain constant throughout the loan term, providing you with certainty regarding your monthly repayments. This enables you to plan your business's finances more effectively. In contrast, variable rates can fluctuate based on market conditions, meaning your repayments could increase or decrease over time. It's essential to weigh the pros and cons of each type of interest rate to determine which one aligns with your business goals and risk appetite. Commercial loans in the UK come in various loan terms, typically ranging from a few months to more extended terms like 20 or 25 years. Shorter loan terms usually have higher monthly repayments but lower overall interest costs, while longer loan terms offer lower monthly repayments but higher total interest costs. It's vital to consider your business's cash flow when deciding on the loan term, ensuring that your repayment schedule is manageable. The terms and conditions of commercial loans are an essential factor to consider. These stipulations can impact your loan eligibility, collateral requirements, and repayment options. It's essential to review these terms thoroughly and engage professional advice if needed before committing to a commercial loan. Here are some key points to consider when exploring interest rates and loan terms for commercial loans in the UK. Compare different lenders' fixed and variable interest rates. Assess the suitability of loan terms based on your business's cash flow and goals. Carefully review the terms and conditions of each loan offer to understand eligibility criteria and other important clauses. By understanding interest rates, loan terms, and other critical aspects of commercial loans, you can confidently select the best financing option for your business in the UK. Security and borrowing. When considering commercial loans in the UK, it's essential to understand the role of security and borrowing. In this section, we'll discuss how securing a loan with assets can impact your borrowing ability and the benefits it can bring. Securing a loan with your assets can provide numerous advantages. For starters, having an asset as collateral can increase your borrowing potential. Lenders are more likely to extend higher amounts because they have something tangible to fall back on if you default on the loan. Some secured business loans often offer higher borrowing amounts and lower rates compared to their unsecured counterparts. Additionally, loans secured with assets typically come with more favorable terms. Lower interest rates and more extended repayment periods are commonly associated with secured loans, making them a cost-effective and attractive option for businesses. By leveraging assets such as property or equipment, you can access the funds you need for your business without putting excessive pressure on your cash flow. When taking out a secured loan, it's important to remember that your assets may be at risk if you fail to make repayments. If you default on the loan, the lender may have the right to seize the asset to recoup their losses. To avoid any unfortunate circumstances, ensure that you can meet the loan repayment terms and keep your assets safe. In contrast, unsecured loans may be suitable for businesses without significant assets. While the borrowing amount might be lower, these loans could provide essential funds for new businesses that are just starting. Keep in mind, however, that unsecured loans usually come with higher interest rates, as there's no collateral for lenders to rely on in case of a default. In conclusion, when considering commercial loans in the UK, carefully assess your business needs and assets to determine whether a secured or unsecured loan is best suited for your requirements. By understanding the role of security and borrowing, you can make informed decisions and find the right financial solution for your business. Fees and charges. When considering commercial loans in the UK, it's crucial to be aware of the various fees and charges involved. In this section, we will discuss common fees you may encounter, such as arrangement fees, security fees, lending fees, and prepayment fees to help you make an informed decision. The arrangement fee is an essential expense to consider as it covers the administration costs of setting up your loan. Typically, these fees range between 0.5% and 5% of the loan amount. Make sure you are aware of this cost as it can significantly impact your overall loan repayment. In addition to arrangement fees, you may also come across security fees. These fees cover the costs associated with securing the loan, such as taking out a charge over your property or other assets. The fees vary depending on the complexity and the risk associated with the transaction. Lending fees are another crucial aspect to keep in mind as you weigh your commercial loan options. These fees cover loan-related costs and can be added to the loan amount. It is important to clarify these beforehand to avoid any unexpected surprises on your loan repayment. Finally, it's essential to understand any prepayment fees that may apply if you choose to repay all or part of your commercial loan before the end of the agreed term. Some lenders charge these fees to compensate for potential lost interest revenue, so make sure you factor this into your calculations if you plan to pay off your loan early. In conclusion, it's crucial to understand the various fees and charges associated with commercial loans in the UK. By being aware of arrangement fees, security fees, lending fees, and prepayment fees, you can make a well-informed decision that best suits your business needs. Commercial loans providers. In the UK, there is a variety of commercial loans providers to choose from. These include well-known banks, lenders, and financial institutions. Among these providers, banks offer a range of commercial loan products to suit the needs of your business. They provide both fixed and variable rate mortgages, with terms usually up to 25 years. Some banks have a minimum £35,001 loan with no upper limit, and they may even waive arrangement fees for new borrowers. Repayment holidays are available, and there might be no early redemption charges, which can add to the flexibility of your financing options. In addition to traditional banks, there are alternative lenders which provide financing solutions for small and medium-sized enterprises, SMEs. Their loan amounts typically range from £3,000 to £500,000, with loan terms varying between 4 to 18 months. The interest rates for these alternative providers can be higher compared to traditional banks, making it essential to compare the rates and terms before committing to a provider. Lastly, some specialist finance providers focus on the specific needs of businesses in various sectors, such as agriculture, residential, or retail. These specialized lenders can offer tailored solutions for properties like homes of multiple occupancy, holiday homes, or even agricultural land. When considering different providers, make sure to explore all the available options and choose one that best suits your business requirements. When searching for the right commercial loan provider, it's crucial to take your time, evaluate the offers from various institutions, and select a provider that aligns with your business's needs and growth plans. By doing so, you'll ensure your business receives the most suitable financing and can thrive in the competitive UK market. Laws and regulations. When it comes to commercial loans in the UK, you should be aware of the legal aspects and regulations governing this area. The Financial Conduct Authority, FCA, plays a significant role in regulating loans, mainly when they are secured against properties owned by individuals or occupied by persons related to the borrower as their home source. In such cases, the FCA regulates the loan under residential mortgage rules. For small and medium-sized enterprises, SMEs, the standards of lending practice provide essential protection. They apply to businesses with a consolidated turnover of up to £25 million across loan, commercial mortgage, overdraft, and credit card product source. The FCA formally recognized these business standards in 2020, demonstrating their significance in maintaining responsible and ethical lending practices. As a business owner, when entering into a commercial loan agreement, it's crucial to understand the terms of the agreement and how it can impact your payment schedule source. Negotiating your loan terms is a significant part of this process, and working with legal experts can be an invaluable resource. Finally, when it comes to taking security over assets, various requirements must be met for the creation and registration of security interest source. Some assets can pose problems when attempting to grant security, so being aware of potential risk areas is vital to your lending experience. What are the best options for small business loans in the UK? There are various options available for small business loans in the UK, including government-backed loans, bank loans, and alternative financing options. To find the best option for your business, it's important to carefully assess your needs and financial circumstances. Some popular options are startup loans and the British Business Bank's Bounce Back Loan Scheme. Other possible options include funding from financial institutions, such as banks. How can I qualify for a government-backed startup loan? To qualify for a startup loan in the UK, your business must meet various eligibility criteria. These criteria may include being UK-based, operating for less than 24 months, and demonstrating a viable business plan and a strong credit history. What interest rates are available for business loans? Interest rates for business loans can vary depending on factors such as the size of the loan, the length of the repayment term, and your business's credit rating. To find the most accurate interest rates for your specific needs, it's best to contact us to find more about available rates and terms on business loans. How do I compare different business loan providers? When comparing business loan providers, you should consider factors such as the interest rates, repayment terms, fees, and the overall reputation of the provider. By contacting us, we can do the heavy lifting for you and search the market and take your case to the most suitable commercial loan provider in the UK. What is the average interest rate for a commercial mortgage in the UK? The interest rates for commercial mortgages in the UK can vary depending on factors such as loan size, property type, and the borrower's credit history. It's crucial to remember that these rates are subject to change, and the actual rates available to your business may differ. For more accurate and up-to-date information, it's advised to consult with a financial expert or loan provider. Can I obtain financing for commercial property purchases? Yes. It is possible to obtain financing for commercial property purchases in the UK using commercial mortgages or other forms of property finance. Lenders typically offer loans up to 75% of the property value, with repayment terms ranging from 5 to 25 years. It's essential to have a solid business plan, a good credit history, and demonstrate the ability to repay the loan. Contact us for more information on available options and requirements to apply for financing. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.